Portability, when we report port vouchers paid out, these are the port outs. This is the PHA that's making that HAP payment to that receiving PHA. These are the units leased of the first of the month and the associated HAP with those units. Portable units administered, this is the receiving PHA. We're going to report the number of units that the PHA is administering and the associated HAP of those units. So you'll see here, there's two categories, the port outs and the port ins, that have to be reported correctly. Project-based vouchers. The number of project-based vouchers under AHAP and not under leased. So in this field, if the housing authority intends to sign and execute a HAP contract to fill project-based vouchers, they really want to report those units they have an agreement to enter a HAP for in this field. They're not reported in any other field. Number of project-based vouchers, PBVs, under HAP and leased. This represents the total number of PBVs under HAP and leased. These units are associated in the field that best describes the type of voucher being used. For an example, if the housing authority has 50 tenant protection vouchers and 20 of them are project-based, we're going to report those 50 tenant protection vouchers that are leased under TPVs, and we're also going to report those 20 that are project-based under number of PBVs under HAP and leased. Number of PBVs under HAP and not leased. This represents the total number of PBVs under a HAP contract and are not leased and not receiving vacancy payments. These vouchers are not reported in any other field but are eligible for admin fees. So it's important, if you have project-based vouchers that are vacant and they're not receiving vacancy payments, you report them here. That's how the authority will receive administrative fees. This field should include RAD 1 and RAD 2 under a HAP contract and not leased, and RAD 1 units that are receiving rehab assistance payments. Number of PBV HAP and not leased with vacancy payment associated with the vacancy HAP expense. This represents the total number of PBVs under HAP and not leased but are receiving a vacancy payment. Vouchers are not reported in any other field and are eligible for admin fees. This includes RAD vouchers receiving the vacancy payments. Number of PBVs under HAP and not leased with vacancy payment and associated vacancy HAP. Total HAP expenses associated with PBVs under HAP contract and not leased with vacancy payments. These expenses are also reported as all other voucher expense field. Vacancy payments and RAP, rental assistance payments for RAD 1 units, should not be reported in this field, but should be reported in the RAD 1 HAP expense field. That first tab would typically take care of all your unit months leased and unit months available. Let's look at the other fields that we have. Deposits to FSS escrow accounts. These deposits are made for participants on the FSS program receiving an escrow amount. FSS escrow forfeitures. The amounts received by the PHA for those residents who opt out of the FSS program. They forfeit their escrow. This money gets reported in this field for the calculation of RMP. Fraud recovery collected this month. This represents the total dollar amount recouped by the PHA as fraud recoveries during the month. Typically, it's 50% that is collected or remaining of the funds after the cost of collection that is applied to UMP. The amount that we're reporting on VMS is the total cash collected attributable to the restricted net position, not the revenue. It's the actual cash. Number of hard-to-house families leased. This represents the number of families with 3 or more minors or a disabled family member that moved to a new unit during the month. Here's an example of those fields. Vouchers under lease on the last day of the month. Total number of vouchers that are under lease on the last day of the month for all categories listed in the HAP total. This includes HAP contracts that are expiring on the last day of the month. Zero HAP units will continue to be reported as leased on the last day of the month for a period of up to 180 days. Housing Authority owned units leased are included in units leased. This is the number of PHA owned units in the voucher program for the month. Units should include the appropriate voucher unit categories. This also includes RAD units. Number of vouchers issued but not under a HAP contract as of the last day of the month. This field represents the cumulative number of new vouchers issued for all categories. It does not include Mainstream 5. So this category is the cumulative amount of participants looking for a place to live. This field does not include vouchers issued to currently assisted families. So a family wishing to move from one unit to another unit that is still under lease are not included. Number of lead-based paint initial clearance tests. This is the total number of initial lead-based paint clearance tests completed during the month. The number of lead-based paint risk assessments is the total number of lead-based paint risk assessments completed during the month. Portable HAP costs billed and unpaid, 90 days or older, represents the amount of portable HAP costs billed by the receiving PHA to the initial PHA that they have not received payment for. Administrative expenses. Total administrative costs, both direct and indirect, incurred by the HCV program. It's going to exclude costs covered by the Family Self-Sufficiency and Home Ownership Coordinator grants, housing conversion fees, mobility counseling, preliminary expenses, portability payments due from other PHAs. Audit costs, separate line item. This is the amount that you actually received an invoice for in that particular month. If you received an invoice in the month of June, you will report the amount of that invoice as an audit cost for the audit. Reporting restricted interest income gets a little tricky. We always report the amount of restricted interest income attributable to HAP in the VMS for each month, but this is not included as part of the RMP calculation. For FDS purposes, restricted interest income reporting, the first $500 of restricted interest income will be reported as unrestricted interest income. Any other restricted interest income earned over $500 will be reported as amount due to the Treasury through the Department of Health and Human Services. Accounting Brief 19 provides clear guidance on how to treat and report this activity. There's a self-certification form that you can fill out if you choose to do so. This does not get submitted. It's just for the PHA's internal records. Please select Next on the player and answer a knowledge check question.